Hey guys, this is James, and I wanted to share with you the 401k calculator that I built, and I want to share that calculator with you at the end of the video. You'll be able to input your own numbers and check out why you should invest in your company's 401k plan if you don't. Why you should invest if you are not investing already. So one of the number one reasons is you get free money. If your company offers an employer match, they're putting in the same amount of money that you put in up to a certain amount. I think most companies are offering 3 to 6%. Some offer a little less than 3%, and then I think I was reading about 10% of the companies match the employer contribution of 6% or more, and only 56% of the companies offer a 401k plan. So if your company does offer a 401k plan, you're definitely going to want to invest in it. And I'm going to show you why. So I built this 401k calculator here. So here are all of the inputs that you put in, and these are my numbers to date here, December of 2021. I'm 30 years old today. But let's say you're a little older or a little younger. Let's say you started investing a little older in life, and let's say you're 40. So whenever you change this number here, this is going to change. So obviously you're probably not going to be investing to 90, but I put 50 years here just to give you a good example, a good spread, just in case you happen to be 15 or so and you invested it all the way up to 50 years, 65 years old. So I'll go through all these things. So let's say your principal balance in your 401k is 0. You started investing right out of college at, say, 23. Your annual salary right out of college, let's say it was $58,000, because that's what mine was. Let's say your contribution, your company lets you start to contribute right away, and it's a modest 3%. Your company matches a modest 3%. And this number right here, historical average, or the general consensus is this should be about 15 to, did I even press record? I did press record. All right, good. This contribution right here, they're saying it should be anywhere from 15 to 20%, and we'll change this number around and we'll see how it changes your final numbers right here. And then what's your expected market growth? I think the standard is anywhere from 6 to 12%. So if you want to be pretty conservative, put 6. If you want to be pretty bullish, put 12. The way that the government's pumping money into the economy, it's been the past 2 years, it's been about 20%. But we'll go a modest 8% here. And then what's your expected annual salary increase? For most people, it's going to be 1 to 2%. So let's go ahead and put 1.5% here. It looks like it just corrected to 2. Increase the decimal point here, so we get a true 1.5%. And I think that's pretty typical. If you're starting out at 58, it's about $1,000 a year, which is pretty common, I think. But then if you wanted to, let's say after 10 years, 23, let's say you were 33, you can play around with this calculator. You can say you get a big raise, say of 20%, and then all of a sudden from 32 to 33, now this is prediction here. You could always copy another spreadsheet over and work off of another spreadsheet. Maybe you could have let's do that. Whoop, it didn't copy. Not sure why. Maybe we'll figure that out later. But you can play around with these numbers here. But let's go back. Let's just say it's 1.5%. So if you started today, let's say you were 23 years old, you had no money in that account. After 1 year, you are going to add your 3% coming from here. That's going to be about $1,700. Your employer matches, that's $1,700. So your total annual addition is going to be $3,480. Your market growth you put in right here at 8%. You are going to have that $3,480 is going to be, theoretically, it's going to be $3,769. Not too much, right? Doesn't seem like that much money. But year 2 at 25, after a 1.5% raise, your annual addition is now going to be $100 more than it was last year with your company match. So your 37 plus 35 has now grown into 7,900. So let's say you get down here 10 years from now. After 10 years, with a modest 3%, 3% is the amount where you can almost set it and forget it. You don't even know it's coming out of your paycheck. It doesn't even hurt that much. Just by default, you're going to have $50,000 after 10 years. If the market continues to go at 8%, which historically it's been anywhere from 6 to 12%. Some people actually argue it's been 12% every year for the entire life of the stock market. So I think the coolest part of a 401k, especially this calculator, is you get to see when you're going to be an automatic millionaire. So this graph right here, you see this line? It looks like if you started at 23 years old and you got a 1.5% raise with all these inputs, you're going to be a millionaire right around 60 years old. So right at 61 years old. So I think the cool thing about this calculator is if you increase this, let's say to 15%, which is some of the financial gurus say to contribute 15 to at least of your own money, no matter what your employer match is, 15%. Now look how that changes. You see the graph here, this red line, 48, you're going to be a millionaire. 49, there you go. And if you wanted to play around with this, maybe let's say you got your MBA, you got a few certificates. Let's say you got a 5% raise here. Let's say at 35, maybe you got another job. Maybe you bumped it up 20%, and then maybe you really started earning at 45. Let's say this was another 20%. Well, you're not going to get 20% every year, so let's cancel that. I might have to work out these numbers a little bit here, but you might have to go back and do 1.5%, but you all get the idea. Let's say you get another 20% raise here and change this back to 1.5. If you all understand Excel, this might be a little bit easier, but if you don't want to play with the numbers and you can kind of just see a prediction here, it's a pretty useful tool. So let's say if you got a 20% raise, 5% raise, you got your 15% match, you'll be a millionaire in your 40s. But I think one of the cool things as well is to see what happens if you stop matching. Let's say you match from 23 to 35, you matched your 3%, and you kept your $2,000 a year. Say you stop matching at 35, you can take all of this right here and you can delete it, and your money is still growing in the market. You've only added about 12, 13 years or so. After 12 years, your money's going to be $78,000, and this is only the 3%. Maybe with a 5% raise or so, your money's going to be still continuing to grow at that 8%. So your $78,000 next year at 8% will be $85,000. And you keep on going, you're still going to be a millionaire by the time that you retire. And that's only adding in a 3%. Let's say you did want to add in a 15%. You want to just really go at it for 12, 13 years. Stop investing at around 35. You're still going to be a default millionaire by the time you're 54, even though you can't pull it out until 59 and a half. This is another strategy that maybe we'll talk about in another video for 401k investing. So hopefully you guys like that video. I'm going to take this sheet, and if you're comfortable with Google Sheets, you can go ahead and go into the description, and I'm going to block the access of it. So to be able to use this calculator, you're going to have to make a copy of your own and copy it to your Gmail account and your Google Sheets, and then you can go ahead and play around with these numbers. So hopefully you guys enjoyed that. Go ahead and subscribe to the channel. We'll have more videos like this of portfolio predictions and investing in stocks. And I might talk a little bit about some of the books that I've read and some passive income ideas. Go ahead and hit that like button, and hope to see you guys again soon. Thanks.